Canadians are turning to private lenders instead of the banks. Goldman Sachs believes the U.S. economy will slow to a crawl next year, and Elon Musk is selling bricks. It's time for the Parkin Real Estate Podcast. Hi, and welcome to the Parkin Real Estate Podcast, where we talk all things real estate, business related, and really anything happening in your life. If you've got a few minutes, we'd love to have you sit back, relax, and enjoy what we have to offer. Welcome back to another episode of the Parkin Real Estate Podcast. We're on episode number 10. It is Monday, November 19th. The year is flying by. Thanks for tuning in and listening. I really appreciate it. And wanted to talk today about a couple of things happening in the world that may affect you and maybe it won't. But I think it's a good listen. And if there's any value or anything that I can provide for you, I am more than happy to oblige. As I talked about at the beginning of this podcast, Canadians are turning to private lenders instead of traditional banks. There was a report done by Erica Alini. I apologize if I butchered that last name. She writes for Global News Online in the Money and Consumer section, and she talks about the risks of Canadians turning to private lenders instead of using traditional banks. And for some, they don't have an option. If they want to buy that house or secure a second mortgage to pay off debt or whatever the case may be, they've got to turn to private lenders. She goes on to write, Canada's stricter mortgage rules are forcing more homeowners to borrow from so-called private and alternative lenders, often at sharply higher interest rates than would be available through a bank. A recent report done by the Toronto brokerage Realosophy Realty, never heard of them, and land registry company Terranet found a significant increase in the share of consumers turning to private lenders for mortgage refinances. Okay, so we're talking about mortgage refinances. So that's number one. In the GTA, they're turning to these refinanciers. I don't even know where I'm going with this. The percentage of mortgage refinance transactions done through private lenders rose from 12% in the second quarter of 2016 to 20% in 2018. That's a 67% increase. The new mortgage rules imposed lower limits on the amount consumers can borrow compared to their income, and it's affecting a lot of Canadians looking to either refinance or get a new mortgage. So who are all these homeowners turning to private lenders? Well, evidence indicates they are homeowners with great credit, fantastic jobs who are simply living beyond their means. Owners who accumulate debt each year because of countless expenses they hadn't budgeted for that and anything else, more like house repairs, maybe surgery for the dog, hockey lessons for kids who suddenly want to play. Okay. But the numbers also suggest that maybe young families hoping to renovate their current home rather than move to a bigger house, often a prohibitively expensive move in the GTA. Generation X households account for over 40% of these mortgage transactions and nearly half of the mortgage value provided by lenders. And another group that seems to be flocking to non-lenders is real estate investors. According to the data from this report, the growth in private financing was the highest in municipalities that had the strongest investor presence. Now, I will speak to the investor part of it. It is extremely tough for an investor to walk into a traditional bank and get a mortgage for a property. Next to impossible. And it really is. Unless you have a significant net worth or you have basically a lot of cash, which would be a significant net worth, I guess. The banks don't even look at things like, your income or your salary. They really don't. And I'm not going to pretend to be an expert on this. There's lots of mortgage brokers and financial experts out there that can speak on this. But if you're trying to buy an investment property, it is next to impossible to secure normal financing. without, again, having those parameters. So there is a huge market for private mortgages. Now, if you're asking what a private lender is, private lenders can be investment corporations that pool capital from investors or individuals looking to lend their own money. And there's literally hundreds of them across the country, said Rob McLister, mortgage planner at IntelliMortgage.com and founder of rates comparable site RateSpy.com. There's a lot of things that happen with these mortgages, but the main things you need to understand are that they're going to be mortgage fees associated with putting the mortgage together if it's a first or second mortgage, number one. Typically 1 to 2% of the mortgage. So if you have a $100,000 mortgage, you're going to be a $1,000 to $2,000 fee just for setting the mortgage up. Now, I mean, a $100,000 mortgage is typically not going to be a second mortgage, although it could be. But if you're talking, for $400,000 to $500,000 mortgage, you're now looking at, $4,000 to $10,000 just for the fee to set up the mortgage. So that's off the top. Then you're going to be paying a significantly higher interest rate than what the current rates from traditional banks are. And that would be at least double, 6 to 7%, and it could go anywhere up to 20% in some cases, depending on the situation. Now, there is a huge need for private mortgages when it comes to investments in real estate. There's a huge need. If you're looking to potentially buy a house, fix it up and sell it, or otherwise known as a flip, and you're going to be in and out in, let's say, 3 to 6 months, paying basically a financial partner to come on the deal and give them, let's say, 8% of the mortgage cost over the term of the deal, it's really not that bad. You're going to obviously have some fees. It may cost you $20,000 for this mortgage, but if your potential gross profit is $100,000, we're talking 20% of your gross profit. And to secure a deal and put it all together and finance it, it's really not that much. What I have an issue with is traditional Canadians looking for a traditional route and going this route to maybe do, home renovations or to put their kids through hockey or whatever, their situation may be. You don't want to tie up, let's call it 10% after all the fees are associated, a 10% interest mortgage on your property. That's just not good. That's just really not good. Reality is, and it is true, a majority of Canadians in the GTA, and I don't have a stat, I say it every podcast, so this is just an opinion, are living at their means or above them. This is just a simple fact, and there is lots of articles and stats to back it up. And I understand as well that sometimes to live in the city, that be Toronto, or to live close enough to the city so that you go to work, it can be a challenge. So listen, I understand that it's not easy out there right now, especially when you're in the market trying to get a home or trying to refinance. Things can get a little bit tight, a little bit tough, and that's why financial planning and due diligence and making sure where you're going is probably one of the most important things you could do to make sure that your house is secure, for your family. But in other news, Goldman Sachs believes the U.S. economy is going to slow to a crawl next year. They predict that 2.5% and 2.2% growth in the first 2 quarters of 2019. So they are going to go down a little bit, respectively, and then just 1.8 and 1.6% real GDP growth in the final 2 quarters. They expect tighter financial conditions and a fading fiscal stimulus to be key drivers of this declaration, wrote the bank's chief economist, Jeff Hadzouis. But Goldman Sachs believes the U.S. is going to skirt the economy for next year and for the following years happening into the early 2020s. It's crazy to think that that's where we're at right now. And I really think that we're coming into we already are in a space where we've never really been before as an economy, as a global economy, but as a North American economy. I believe the American economy and the Canadian economy are tied together for a lot of things, specifically resources, natural resources, oil, our lumber trade, dairy products. A lot of the resources that we use are affected by what happens down in the United States of America. Is this a bad thing? I don't know. They're not talking recession. They're not talking negative sub-zero growth or no growth. I don't think it's a bad thing. I think it's a reality of where we are as a society. We've lived a very good life for the last 10 years, speaking nationally and internationally. And a lot of that has been on the back of debt. It's been financed. So there's a lot of issues we're going to have to face when it comes time to pay the piper as an economy, both Canadian and American and globally. So I think we're going to be running into some situations here where things are going to tighten up. But when things tighten up, it's a perfect time to go out and look for opportunity. And I'm going to speak on this for a couple minutes. I had the great fortune of talking to a friend of mine who was actually going to be on the business podcast. We're going to be doing a podcast for local businesses that we want to showcase their business and really promote them because they do amazing things. But I was talking to him, and we were talking about when the market changes, the economy changes, there's so much opportunity for growth, but are you ready for that? Are you ready for when the market starts to contract, you start to expand? And the key to getting ahead in life is looking for those opportunities, number one. But the second thing, and it's most important, is to be ready for those opportunities. Are you ready for them? When the market turns downward, can you go in and expand into that downward market and take over more market share? Are you ready for it? You've probably got another year. You might have two to really be ready for a market that's probably going to downturn. I'm going to say in 2020 or 2021. It's coming. Trends are there. The signs are there. We're seeing it. It's not here yet. Be ready. Our third story, Elon Musk is now selling bricks. Elon Musk has a company called The Boring Company. He's looking to basically drill tunnels under the city of LA to help alleviate the traffic. If you've ever been to LA, I have not, but I do know and have seen many reports on how horrific the traffic is there. He's looking to alleviate that. So he's basically started a tunnel company called The Boring Company, Boring, to create these tunnels. Well, Elon is basically taking the waste, the material, the rock, the stone, and turning it into bricks, crushing it down, turning it into bricks. He's going to sell those bricks for 10 cents. I don't know where the profits from those bricks are going to go, but he has also come out and said that he would give the bricks away for free if they were used for affordable housing projects. He goes on to say that the bricks are rated for their climate there, meaning earthquakes and such. Kind of cool to see a pioneer of our day, really one of the Henry Fords happening right now in our society that we are living through, and there's a lot of them out there, especially in the tech industry, but Elon Musk is turning the car industry on its head. Really a huge disruptor, turning the space industry that was non-existent really on its head, creating lots of private companies as a result of, he's not creating them, but a lot of private companies are being created as a result of his ingenuity and fortitude in this space. Honestly, a genius. When I when I look at who a genius is today. Someone who takes no and shoves it and says, I'm going to figure it out. Someone who has massive amounts of weight on his shoulder, and it's not just him, his board of directors and everybody else responsible, taking on all this debt and financial responsibility to create a product, to create something that is going to change the lives of everybody, really, of everybody. So, and people are saying no every day to him, every day. And he turns around and creates some of the best products that are out there. Love him or not, I think the guy's a genius. And while I don't necessarily agree with everything he says or everything he does, I think he does deserve some respect in regards to what he is doing for our world. That is all for the Ken Parkin Real Estate Podcast this Monday, November 19th. Thank you so much for Thank you for listening. I truly appreciate it. And I hope you go out and you have yourself an amazing day. And better yet, go and have an amazing week. We'll be back soon.